Stress levels seem to have been easing over the outcome of the government's stress tests of the country's major banks due on Thursday. The tests, announced in February, are aimed at gauging the already battered banks' ability to withstand future losses in an even deeper recession. Regulators have stated that none of the banks will fail the tests. Analysts predict instead the government will instruct about 10 of the 19 banks to raise more capital or funds to backstop future losses. Some of the banks have complained the tests have been too harsh. Stuart Plesser, banking equities analyst at Standard & Poor's, disagrees.
The government's interest is really to get the banks lending more, and I think it would be hard for the banks to argue that they wouldn't be lending more, or they would be lending more money if they had more capital. And so it's really the government's interest to get more capital into these banks for the purposes not of survival, really, which is what the bank is talking about, but to lend to the economy.
Which banks will be told to raise more capital is still unknown. On Monday, Bank of America denied a report that it was trying to raise $10 billion. Analysts say the total capital required may reach $150 billion. Many analysts say the prospects of raising capital are good. A jump in banking stocks since March reflects Wall Street's increased confidence in the banking sector. Yet analysts say there are questions about whether the government will accurately reflect banks' potential shortfalls.
There are still problems on the bank's balance sheets. The biggest issue, I think, looking ahead is probably commercial real estate and exposure there. Those prices or charge-offs really haven't occurred yet, but they're waiting to occur.
Wall Street is less fearful than it was of an all-out bank failure, but raising capital means converting stock and diluting share prices. So investors, though less stressed, are anxious to know which banks the government is focusing on and how much it wants from each one. Jeannie Yerman, Reuters.